Hey everyone, Couch Investor back to another video for today, in the first video of 2024. So happy New Year's to all of you. Thank you all for joining. Now, two companies, Coupang and C Limited, have been mentioned quite a lot in the chat during the live streams. So I thought I would compare both of those in this video. We're going to have a look at valuations, expectations, and the latest earnings reported. And at the end, we're going to have a look at the graph. Of course, both companies in the e-commerce sector. Garena Free Fire for C Limited is a bit exposure to the gaming as well. Coupang in South Korea, entering Taiwan, C Limited, Southeast Asia, and Brazil as well. So yes, maybe same industry, different locations around the globe. So first up, I want to start with a comparison here. Coupang and C Limited, PE, EV to EBITDA, price to sales, price to free cash flow. So currently, I think it's pretty safe to say that Coupang is a much cheaper stock to buy right now. C Limited has a forward PE of 69.2 times, whereas Coupang 41.7 times, which is also lower than its 5-year mean, or in this case, 3-year mean. When we look at EV to EBITDA in the next 12 months, it's a bit closer between the two. C is at 32.4 times, whereas Coupang 25.9 times. Price to sales, 1.7 times for C Limited, 1.1 times for Coupang, whereas their mean were a bit higher, much higher for C Limited actually, 6.5 times. And then price to free cash flow, Coupang here again, a better one, 15.7 times compared to C Limited, 22.5 times. Now Coupang itself has a market cap of close to $29 billion. It was just up 10% back in 2023. If we look at the average price target for Coupang, it sits at $21.2, which represents 30.9% upside. If we look at C Limited, the average price target there sits at $56, which represents a 38.3% upside from the price we're at today. Now, if we look at the expectations for C Limited in fiscal year 24 and 25, by the way, C Limited market cap of just under $23 billion, and in 2023, the stock was down 22%. So it's pretty clear that the analysts are expecting this company to become way more profitable. Top line will grow double digits still, low double digits, but still double digits, plus you're getting a way more profitable company. Now let's have a look at Coupang. Here for Coupang, we're seeing fiscal year 2024 sales growth year over year close to 13%, EPS already in fiscal year 2024 growing 74.3%, and then in fiscal year 2025, sales growth of 13.4% year over year, and another big increase here in EPS, 58% year over year growth. So yes, even with the analyst expectations for Coupang here, they are, let's say, beating C Limited on that front. Now, that said, both companies are expected to grow top and bottom line quite significantly in the coming years. Now, before I continue, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. The goal for 2024 is to reach 40,000 subscribers. So let's try and do that as soon as possible. Thank you very much. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thanks again. Now, first stop here is the Coupang earnings report, the latest earnings report. Here we can see that net revenue has increased 21% year over year, or 18% on an FX neutral basis. Active customers increased 14%, reaching 20 million. Gross profit has increased 27% year over year. Gross profit margin is up 110 basis points year over year, which has reached 25.3%. Then, of course, this is a profitable company. Operating income is up 13% year over year to reach $87 million. Yes, much lower than Q2 and Q1. As for net income, that remained flat year over year, down quarter over quarter, but still this is a company that is growing quite fast and in a profitable way. Now, if we look at cash flow, operating cash flow, this is in the trailing 12 months. That was $2.6 billion in Q3. That's up $2.8 billion year over year. As for free cash flow, trailing 12 months, $1.9 billion. That's up $2.9 billion year over year. So definitely huge improvements there. Now, like I said at the start of this video, they did launch in Taiwan. So when they launched Rocket Delivery in Taiwan back in October 2022, the offering in Taiwan has scaled much faster in its first year of operation than it did in the first year in Korea. And our app is on pace to be the most downloaded app in the market for all 2023. So definitely a strong start there. Of course, Taiwan, that region, geopolitical risk should be calculated in your predictions, in your models as well, because, well, just the way it is in that region, whether it's a Chinese stock, in this case, Korean stock, or Southeast Asian stock with C Limited, you just have to add that risk. Now, switching to C Limited, so they increased GAAP revenue by just 5% year over year. As you can see, the majority of revenue comes from the e-commerce business, then from Garena Free Fire or the digital entertainment side, and then from C Money. Adjusted EBITDA was $35.3 million, but still a big unprofitable segment, which is the e-commerce one. When it comes to cash equivalents, short-term investments, and other treasury investments, no issues there. They've increased it by $600 million year over year. So I don't think there need to raise external funding. So that's a pretty positive sign. Because remember, a quarter before that, they said that they can continue to grow, but grow in a profitable way. Now, this quarter has shown that, yes, they can grow, but now they're taking a bit more risk on because they feel they are comfortable taking that risk. They feel they have enough cash to operate without having to dilute shareholders in the future. So, okay, let's see what happens in the coming quarters. With regards to the e-commerce segment, so GAAP marketplace revenue was up 18% year over year. Again, still an unprofitable segment. As for gross orders and GMV, gross order is up 13% year over year, GMV just up 5%. Now, this is the big deal here, digital entertainment, Garena. So the bookings maybe have bottomed, which should be a good sign. We're going to know more in a month or so from now. If it has bottomed, great. Then you're going to have to see if quarterly active users have bottomed as well and the paying user ratio. Is it finally going to go back up? We had 1 quarter of it going up, but then we go back down. Yes, it is now back in India, so that should definitely boost this segment. And then as for the digital financial services or C Money, up 37% year over year for revenue. Now, as for the cost and expenses, like I said, they're trying to become more and more profitable. Analysts are expecting to become more and more profitable. So yes, you can see here year over year, some cost cuts, but quarter over quarter, if you remember, some of these segments have been lower. So they have deliberately decided to start increasing the expenses, especially with sales and marketing, to start and grow the business faster right now. And so this resulted as well into net loss going back into the negative, into a loss. The previous quarter, we were actually in the black and not red. Now, they also mentioned in the earnings report that their segment in Brazil is doing much better, growing fast, and they feel comfortable that they can grow fast and also in a profitable way. So that's definitely great to hear. Remember, these types of companies, whether it's C or Coupang, they are in a very competitive industry, right? C even more with Shopee, because Shopee operates in markets where you have Temu, Lazada, Alibaba, Amazon, Shein, etc., etc. Coupang, since it is mainly South Korea and now a bit of Taiwan, they can dominate that market because it is their home market. Since C wants to go overseas, no pun intended, they have to compete with the others, which is also why we're seeing the e-commerce side of things not being profitable for a while. They think that bringing or adding a lot of live streaming stuff for e-commerce, which is very popular in Asia, should help them in the future. So again, let's wait and see. The last thing here is the graph. We're starting here with Coupang. As you can see, they have been making higher lows, which is definitely bullish for a stock. Currently, the stock sits at $16, which is just over the 20-day moving average. The 200-day moving average sits closer to $17. RSI here pretty neutral. If we look at C Limited, still hovering around that area here, which was $40, which we've been at since the summer of 2023. Currently, the stock is at $39.80 before the market opens, which is just at the 50-day moving average over the 20-day moving one, and the 200-day moving one sits at $51. RSI is also neutral. even a bit lower than that actually. So to conclude, you have two companies here where their stock have not really been moving that much on the upside, that is. Now, one company, which is Coupang, is growing and growing in a profitable way. Yes, it is just for the South Korean market and now in Taiwan, so that's your exposure. With regards to C Limited, it's growing, but it's growing in an unprofitable way, even though they think they can reach profitability in the short term and then sustain that for the long-term future as well. They're operating obviously in other markets, so you get exposure to that, plus gaming aspect as well. Now, I personally do not own Coupang or C Limited. My exposures are through Amazon and are through Mercado Libre. I've told you many times why I chose those companies and not Coupang or C Limited, even though right now at current valuation, as we're seeing, Coupang purely valuation wise is a better option. I can understand why looking at C Limited right now looks very attractive, because it could be a bottom for the business and for the stock. And then once macro improves a lot, you can see a huge boost to that business, mainly through the digital entertainment side, through that Indian boost, which will definitely improve the profitability of the business. So I can understand those that go with C Limited and definitely those that go with Coupang. That's just my opinion. So if you need an answer, what's the better buy? I would say Coupang, to me, looks like a better buy. We talked about the Farfetch acquisition. If you want to watch that, it's going to be in the top right corner. But I don't think you can go wrong in the long-term future with any of those companies. Of course, if the stock goes back up to pandemic levels, then maybe it will be time to trim if the business does not follow that momentum. So that will be it for this video. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.